Hello, everybody. Welcome to another episode of The Sense of Things with Ron and Jeff. On today's show, Ron's going to take us into the week in history once again. He's also got some stuff on credit card interest rates. That's where we left off last week talking about. He's also got some charts on the biggest tail risks on the mortgage side, as well as a little bit of an estimate of the first quarter GDP. So he'll have that. I've got some economic data, some what I would consider a little busy data that we're seeing that's making things unclear, and that might have led to the Fed holding or halting any interest rate drops in their meeting yesterday. So we'll have a little bit of an overview of that. So stay tuned. We'll be right back on in just a second. Hey everybody, welcome to the show. Ron, how are you, my friend?
Good morning. The earnings season has certainly kicked off.
It
And
has.
the tech is taken off as long as you're not a software stock.
Yeah. Yeah, I know. It's funny this year with that my themes, I really don't have much exposure to it, so I just haven't even, quite frankly, paid much attention to a lot of the big tech names and stuff like that, and the Nifty 5 or 8 or 10 or whatever the heck it is
Yeah.
nowadays.
The funny thing is, memory and storage has been going through the roof. We had several clients in Seagate, and for years,
Yeah,
Seagate was a decent stock.
yeah,
At the low of the tariffs in
not
April 8th,
great.
at the April 8th last year, the low was 63 and change.
Yep.
Yesterday, the stock was up 74, and now it's selling at 448, 449.
Wow.
It's insane. It's
Yeah,
insane.
yeah. The interesting thing to me is what I've seen this with them and Western Digital, and I'm still trying to figure out what has prompted that just massive move up. Because I'm assuming it's something to do with data centers and stuff like that. But
Storage. You got to store the data somewhere.
yeah,
And I think there was a quote from Jensen Huang and over the last several months, or even 6 to 9 months ago, that he anticipated there
hmm.
may be a shortage in chips and in storage.
And
So when
storage.
he
Okay.
speaks, people listen, right?
Yeah, that's it. And yeah, like I said, I've watched it just rocket up over the last really year. You look at Western Digital and Seagate, but
It
Seagate's
does
been the
too.
key. Yeah, Seagate's been the key. It's really led that. I think Western Digital's more of a yeah, yeah, this one's going up, so this one's got to go up too as a result of it.
Western Digital, a little bit of Seagate was always known back in the day as the hard drive.
Yeah.
They always had the hard drives back in the day.
Mm.
So
Yeah.
things have changed.
Yeah, now they've gone to solid state everything, but you're even seeing, interestingly enough, AMD's gotten some livelihood to it for some reason. It's
Chips,
the chips are outstanding. They were just getting
Micron
pummeled
too.
by, yeah, they were getting pummeled by Nvidia, and man, all of a sudden, I'm just looking at our position in that, it's up like 15% in a month. So
Yeah.
something finally everybody realized maybe AMD actually makes some chips or something.
I don't know. I think one or two of them maybe take out targets because I know Seagate
Could be.
has a market cap around 85 or 90 billion, and that's petty
Yeah.
cash for some of the big
Yeah,
boys.
exactly. Literally, you could an Apple or an Nvidia could just say, "Hey, we just want it, and we'll just
Yeah.
stroke a check for it." They wouldn't even have to do a stock deal on it. Cool. What do you got as far as this week in history?
All right, here we go. First, 1790, the first session of the Supreme Court took place.
Okay.
1838. I did not know this. Tennessee
Huh.
passes nation's first prohibition law.
Which is crazy because they make whiskey.
Well, that's where
It's
Jack
like one of
Daniels
their
is. That is
major
correct.
one of their major products, and they make whiskey. That's crazy.
They can make it doesn't mean they're going to consume it.
That's true. Legally.
1865, House passes the 13th Amendment, abolishing slavery in America.
Awesome.
1933, the Lone Ranger debate debuts on Detroit radio. Now, why did I put this in there? I was thinking of my father years ago. Whenever we used to come back from dinner on Sunday night, that was our night. We all went out to dinner. He put
Mhm.
on the radio station and listened to reruns of The Shadow, which it's comical, but I can understand back in the day that
Yeah,
that was like an audio book, right?
of
You
course.
listen
Yeah.
to it, whatever. So when I saw this, I'm like, in honor of him, I'll put this on there.
Or the Long Ranger, either one.
There you go.
But
1936, U.S. Baseball Hall of Fame elects first members, and
okay, cool.
controversy ever since.
Yes.
1951, first atomic detonation at the Nevada test site. As a matter
Okay.
of fact, in Vegas, they used to have atomic watch parties where they
Yeah.
knew it was going to go off and everybody would be back however many miles it
Up on the
was
roofs of the
to watch the
hotel.
nuclear bombs go off. I don't know how often
We
they did it. I think it was a few times a month.
It was quite a bit because we went to when we were out in Vegas a couple of years ago. Remember, you and I that's where we met, was out at one of those conferences, and they canceled it because of the the pandemic. And so Crystal and I just went out there for a long weekend, and we went to the Atomic Test Museum, and you see those like overhead pictures of that test site, and it's just pockmarked everywhere. So they blew up a ton of those things.
Oh, yeah. 1964, one of my
Dr.
favorite movies, Dr.
Strangelove.
Strangelove, or something about the bomb, right?
Yeah, oh
I
yeah, it's
got
like a
Peter
huge long
Sellers,
title.
George C. Scott was in that. It was
Slim
a good
Pickens,
flick.
Slim Pickens
Slim
riding the bomb
Pickens.
down. Yep.
Oh, yeah. But he couldn't have picked a better person to be in that role as the pilot. Now, other than that, I know he was in Blazing Saddles, but I don't remember too many other things he was in.
Movies and stuff like that.
1967, unfortunately,
Uh,
this was an anniversary of when the astronauts died in the launch pad fire.
mm.
100% oxygen. There was a spark. That was the end of that.
And lots of Velcro, way too much Velcro inside there.
1985,
Ah,
music stars, excuse me, gather to record We Are the
we
World.
are the world.
There's actually a very good Netflix documentary on this that came out last year. It was
Yep.
very interesting.
Oh, it was
A lot of the
awesome.
behind the scenes and
Yeah.
how people got like upset and left, and
Oh,
so it was
yeah.
good.
But my favorite part of that whole thing was Bob Dylan. I don't know what he was
He
smoking.
didn't know his lines.
He didn't even know who he was, I don't think.
I
And it
know that's
was
what
what
happens when
was
you
it?
take mushrooms.
I can't remember if it was like Lionel Richie or something like that that had to like, okay, this is what I need you to do
Yes.
specifically.
Yeah. Yeah. He and Quincy Jones were the producers on that.
Yep.
1990, first McDonald's opens in the Soviet Union after
Soviet
the
Union.
wall comes down the year before, and the rest is history.
The rest is history.
They get
Now we
fat. They get fat along with the rest of the U.S. citizens.
funniest thing. So Crystal and I were over in Europe for Christmas markets, and there was a picture. So we had all these pictures we took on Facebook. There was like one of those little things where it came back as, oh, here's remember this in history and all this stuff. And so we're looking at the pictures, and she goes, "You got to see this." And all these pictures in front of the Berlin Wall, oh, in front of this, and then we're right at Checkpoint Charlie, and it identifies as we were at KFC. So
Of course. Why not? All right. 2003,
Columbia,
a Columbia
yep.
Space Shuttle mission ends in disaster.
We were just talking about that the other day because Crystal's, I thought it was earlier in the year, and I'm like, nope, it was January. That's I think the last launch that they'd done in a January because it was so bad.
All right. So here we go. The most common passwords. I thought it was just 1, 2, 3, 4, but apparently it's 1 through 6.
Okay.
So I
And
thought
then
this
and
was
then through 9.
yeah, but I also thought the last one, password, would have had more too. Oh, here they got password up
Yeah,
here.
it's right there.
One just has a capital P.
Okay.
I like this one. Shh, it's a secret.
All right, or my favorite, secret. QWERTY.
Yeah,
Wow.
I know a lot of people now do characters and things like that,
Yeah.
but
If you're reading this or if you're watching this and you have any of these passwords, please change them today at this point.
or do it backwards.
Yeah, whatever it takes. Yeah, wow. I would have never thought. I love the 1 through 9. It's, oh, I've got a really long password. Yeah, but it's sequential. That's not good.
Or you could have gone 9 through 1, just do it backwards.
Yeah, exactly.
All right, here we go. Now, we've shown this chart over time
Mm.
probably for 2 years.
Yeah.
And with everything coming up about credit card rates and whatever, I wanted to show, first of all, since 22, this was the big rise to where it's
Hmm.
at right now in the 21 to 22% range.
Yes.
I thought it
But the
was
banks just
interesting
can't,
because,
the banks can't make money if it's not at 23 or
well,
24%.
you're right, but this is the crazy thing. The average was just under 14 for 20,
Forever.
yeah, for 26 of those years. You
Yeah.
got to give me a break.
We
Makes
could,
sense.
if those rates go down, we just can't make money.
That's why I said they're trying to cap it at 10. They need
Mm.
legislation to pass this. I
Yeah.
think they'll probably end up around 15.
Yeah. Which
They'll just,
is fine. Just cap it at around 15 and
yeah, I still
then
don't understand how they say, oh, if we go down that low, it'll hurt their credit scores. I have no idea the
it makes
legitimacy
no
of that.
sense. Yeah, it makes no sense at all. No, it'll hurt your stock profits and your dividends that you're pumping out to your shareholders, but yeah, it's not going to hurt anybody's credit rating. Just look at that in 2022, that just absolutely outlandish run up, and rates have come down significantly since then, and they have no intention of pulling them back down.
But
You
there
know,
were interest rate rises in this
yeah,
time frame here up until the market collapsed in '08. So, and by the way, this was like I think 4 or 5% Fed
yep,
rate in
yep,
'05 and '06.
yep.
So does so the interest rate thing, I don't understand. Like if it goes up, credit card rates got to go up. No,
Mm,
this is just greed.
that is absolute
Absolute,
greed.
and
Yeah,
also collusion.
yep.
Collusion
Yeah,
and
because they're
greed.
all doing this together. They're not one. If you can get one of them to come down, maybe the other ones will start to do it for competitiveness. But yeah, that's the reality is they know they've got people trapped basically at this point. And you figure 21%, a quarter of everything you pay or more is going just to interest every. So you're never going to get out of this.
Now,
Yeah.
all right. So, primary mortgage market study.
Okay.
So, here we are hovering just above the 6% range. Now, I thought this was
Mm.
interesting, probably a deeper conversation for another time. But you know what they were talking about when they said, oh, a 50-year mortgage, what you would pay in interest?
Yeah.
I don't think half the people understand what they're paying in interest on a 30-year mortgage.
Yeah.
I don't think any mortgages should be above 15
Mm.
because at least it gives you a realistic time frame to pay it off and you're building up equity a lot
Yeah.
faster. And then if the mortgage rates were half the amount at 15-year, that makes more logical sense over a long period of time because they're bitching about a 50-year, how much you're paying in interest. Yeah, look how much you're paying in
Hmm.
30-year.
Yeah.
But that
Yeah.
gave affordability for people to get into a house.
That's the key. And in the end, it's okay, what can you do to try and pull these rates down a little bit to get them a little bit more in line? Quite frankly, they're, if you look back out to before 2008, they're where they were at that point. And the market, interestingly enough, on the other podcast I do with a realtor, we were talking about this, and the actual prices, especially in some of the hot markets, Austin was the during the pandemic, Austin was the poster child for this. We've seen rates come back, like actual prices of houses down like 17, 18%
Yeah,
from the peak at this
yeah.
point. So I think the market is adjusting to it. I personally don't see us getting much below six at this point. I think it's going to hang in there around six, and the market's just going to have
They're
to
going to find
adjust.
some way to get it to 5.5 by the end of the year. That's one of my
Yeah.
predictions.
Yeah,
Well,
they've talked about having Freddie and Fannie go in and buy up mortgages and all that. The problem is it's like a 1.5 trillion market, and they're talking about 15 to 20 billion dollars. That's literally like throwing a small glass of water on a big fire. It's not going to do any good.
no. Then on the right, we have two slides here. This is the first one. So with the first one, this is the B of A Global Fund Manager Survey. So they
Hmm.
want to look at the biggest tail risks. Now, notice the phrase tail risk versus
Hmm.
tailwind or headwind. So they're
Yeah.
saying, look, yes, we believe we could go forward, but here are our risks. Obviously, geopolitical is always going to be in the ether when we talk about this. The AI
Hmm.
bubble I thought was interesting because they're looking at less of a risk now than in January
Than
than
they
it
were
was in
previously.
November, which I
Yeah.
think is interesting because They're all still going up. Now, the
Hmm.
next slide is a little tough to view, but you'll get it. So it's now going
Yeah.
back to the survey, right, of July of 11, going
Okay.
back, if you just see every 3 months and how things have just changed
Mm.
of possible trade war recessions, second wave of inflation, possibly, which didn't really happen, the AI
Hmm.
equity bubble, and then, of course, geopolitical risk. But if you just see geopolitical, that's just
I mean,
ubiquitous
that's a
throughout this whole
given.
chart.
Yeah, I was just going to say that's a given. We've been literally for the last 5,000 years, we've had some kind of conflict going around in the world. So, yeah, it's just the world we live in.
But here we are. If you look at April, this thing is just off the chart. More than
Hmm.
80% looked at the tail risk being a recession.
Yeah.
And then if you take a look at April of 2022, when interest rates spiked, what they were looking at was a recession. They were
Hmm.
looking at hawkish central banks. But then over here, right when they were literally probably in the third or fourth hike of 75 basis points, they're looking at a credit crunch because the interest rates are going up. We're not going to be able to send out as much money. So
Yeah.
I think this is very interesting. How many of these things actually contributed to tail risk? I would say a good chunk of them, but
Yeah.
obviously the recessions never happened. Your thoughts?
Yeah. But what is tail risk at this point? Okay, how do you measure tail risk? The market has been, we're on year number 4 of a double digit market at this point. I don't see it slowing down anytime soon. So if something happens, it's probably going to be from the geopolitical standpoint, but honestly don't know. Any wacko with a truck and a bomb can cause geopolitical risk at this
Absolutely.
point. The AI equity bubble, I don't know. I personally, I mean, from looking at the market, the good thing that I have seen this year and from some of the moves we made portfolio wise, I'm seeing more money working its way out into the regular part of the market. Unless, yeah, you still see the big boys going up, but I'm seeing more of the other 497 stocks in the S&P 500 that are actually starting to go up. And I think we're seeing a much more breadth in the market than we've seen in a long time, which is great because then that means there's a lot more opportunity with less risk as you're going out there. That's the amazing
And my last slide, I know we made fun of them before and they were dead on, was the Atlanta Fed. And
part.
they're looking, I can't
Hey,
believe it,
that's,
at above 5%
I
for
can believe
last
it.
quarter.
I can believe it.
We laughed at this because they were always above everybody else,
Mhm.
and they definitely hit it
And
a couple of times.
yeah, they've been pretty dang close. Yeah, sometimes they were a little bit more probably excited than the rest, but they've been pretty dang on track
But the
with it.
average of the top 10
Yeah.
below isn't even 2%.
Yep.
They're more than two and a half
Yeah.
times that.
Yeah. The funny thing is when you look at the blue chip consensus, okay, we've had 2 quarters in a row over 3%, but you think it's going to be 2% at this point. That miraculously something's going to happen and be down there. You know what? I think the Atlanta Fed, they've been willing to go, you know what? We're not going to sit here and do the kind of group think that everybody else is doing. And once again, they've been pretty dang accurate as a result of it.
Yeah, I agree. All right, what do you got?
Once again, I look at economists and I'm like, okay, did you all go to the same schools and you all
No.
think exactly the same way? And if you don't like something, you're going to keep continuing to do the same thing. All right, let me share a little bit here. Just taking a look at some of the Econo Day stuff for the week. Can you see that one okay, Ron? Do I need to bump it up?
I cannot see it at all.
Oh,
Oh, yeah.
okay.
You got to definitely make it like 5 times bigger.
Okay, right around there.
Oh, that's good. Yep.
Okay. All right, a few things off of this week's calendar that I thought were interesting. We've seen a lot. One, the stock market's blowing up and going like crazy, and there's huge pockets of things that are going through the roof. But more than anything, we get back to consumer confidence. And even though the administration is saying, hey, things are great and things are working that way, the stock market's saying, hey, everything's great and all that, consumers are still feeling it and going, not so much. So we had a consensus of 90 coming into this week's consumer confidence or this month's, and it came in at 84.5. So once
Yeah.
again, consumers are just not feeling it. at this point. And,
No.
that more than anything, until you get the consumer to go, hey, we feel good about this, it doesn't matter anything else that anybody says or what any other politician says. This I thought was extremely interesting. This was a late number coming out of the Fed. Or late number coming out. It was supposed to have been December 24th. Durable goods orders, these were off the charts positive. Going right into the end of the year. This was November 2025. It's going to be interesting to see what the December numbers are. Prior to that, durable goods were down 2.1%. Consensus had been, like I said, 3. We came in at really close to the top of the range. So this is going to be interesting, especially coming into the end of the year with companies that can do full expensing. It'd be interesting to see what happened in the markets, which I guess we'll see sometime in February. We'll see the December numbers. International trades of goods and services. This is one I said I've been following. It was really intriguing because we got 2 of these reports right in a row where it was around 29 billion negative, meaning inflow versus outflow of our country. It bounced back up. It almost doubled again this month. So it's just, once again, it's something we're going to have to keep an eye on. And this was some of these cloudy numbers to say, okay, what, where, and how. Last is jobless claims came in where we thought, a little bit higher than consensus, but within the consensus range. And it's right about where it's been, around 210 to 200. So I don't think anything extraordinary there. And I think that led to some of the Fed just saying, okay, we're going to take a wait and see. We were talking before this on the Fed chairman's speech yesterday. I literally I sat and listened to it, and it was gobbledygook, but more of the same of just, hey, we're data dependent and we're going to go. And I don't think there's a clear trend. What's your thoughts?
I got to tell you, I think the Fed is doing a good job. I know that maybe not be the popular opinion, but 2 things. Now, there have been a rash of layoffs. We've seen that kind of coming out.
Yeah.
But unemployment is still under 5%, or unemployment
Yeah.
is still under 5%.
Yep.
GDP, there's growth and whatever. There's no reason, in my opinion, to step on the gas, lower rates, and keep flooding the market with more money right now. And I
Yeah.
heard actually 2 market strategists talk yesterday that if we truly get, let's just say Powell leaves in May, and the next 2 meetings, they lower rates a total of a quarter or a half a point. People, they're saying that's not good because they're saying something happened with the economy. I know the administration, this is a whole nother conversation, talks about what we're paying in our debt because of the interest rate, but
Yeah.
that's not the Fed.
That's not the Fed's rate. Yeah, I think that's the problem is, once again, I think every politician needs to take an economics course because they don't seem to understand that what the Fed does has absolutely nothing to do with that. They control the short end of the market. They don't control mortgage rates and all that. That's the bond market.
Yeah, but Jeff, this is the problem. You and I are junkies for this.
Yeah.
95 to 98% of America doesn't even understand
Doesn't
it.
understand it. Yep.
Or they don't care.
Yeah.
That's what's worse. They don't care. All they want to know is, I want to make more money. I want to spend more money. That's
Yeah.
it. That's
Yeah.
it. I need a job for security. That's
Yeah.
it.
I need a
Politicians
job to
make
pay
it.
my exorbitant credit card bills that I have to pay.
Yeah,
So,
it just that unfortunately most people don't understand that. And it's a shame, right? They're not
yeah.
teaching it in schools. And as far as I'm concerned, we said it 2 years ago, we said it last year. There'll probably be 2 or 3 rate cuts, but there's no way 1% or more. I don't see how that means something bad would have to happen to the economy.
Yeah. Like I said, I think they're getting close to where that neutral rate needs to be. So I could see another 50 basis points, and then it's where it needs to be. You still want to have, I think people come to this belief that, oh, interest rates really need to be super low like they were. Like they were was not normal at this point. We even looked at, like, mortgage rates in 2009 versus where they are today, they're right about where they need to be. It's just we've seen, from an affordability standpoint, we've seen massive rise in the amount of the cost of housing, the actual physical cost of housing, not the mortgage rates. And I think that's where you're going to see, I think you're going to see more of this pullback. The reality is we're sitting like 5, 6 years from the pandemic when all these people moved. And the reality is people are having to now go back to work. They thought they would be able to move to someplace far away from where their work is, and now their work wants them to be back in the office. So they're going to have to move. Plus, the simple fact that people get to a point where they have to move because of job changes and things like that. And the reality is, you got to sell your house, and that's going to be whatever price it is at that time, or you're going to have to lower it to get to that point. Because we've seen average on market like 20% higher this year than we were seeing in previous years. So people are keeping their rate or keeping their price of their house way up, but nobody's buying. So
No, and unless they're putting 50% or more down or they're
yeah,
paying cash, yeah, we're going to see definitely more price decrease, price listing decreases, or I know there was a record last month of the amount pulled off the market.
yeah.
So the spring's coming up. That's the biggest time of the year. We'll have to see how it
Mhm.
goes. Maybe we'll cover that next time.
What are you seeing out in the Phoenix area? Because that was another hotbed out
We're
there.
definitely following the trend, but we're not at the
Okay.
peak of the trend where we're
Okay.
having the biggest price decreases or the most amount of houses coming off the market, but they're ticking up. They're
Hmm.
definitely ticking
Yeah.
up.
Yeah. I guess that's a good sign. It's good for you because your rates, yours is going up. And ours, like I said, have been steadily going down, but
No,
they
ticking
went
up
up.
trend wise as far
Yeah.
as listings being pulled off the market and price
Oh,
decreases.
yeah, yeah. So then they can pop it back on the market in a few months and go, oh, look, it's a brand new listing at this point. Not
I think they changed that law. I don't know. I think it's got to be off the market from on a listing for 90 days,
okay
which makes
before they can
sense if they
relist.
took it off the market November
Yeah,
and December to get ready for March, April.
selling season here. Yeah, you weren't going to sell it during the holidays anyhow, so take it off and then throw it back on, and it's like a
Yep.
whole new world. Folks, thanks for joining us. As always, make sure that you subscribe to the channel and give us an upvote if you can. We appreciate that, and that tells us we're doing a good job out here. So thanks a lot, and we will see you guys back here the very next time.